Good afternoon, good morning, good evening, wherever you're tuning in from. This is Crypto Talk with Brianna and Scott. I'm Scott. Hi, Brianna. How you doing today?
Hi, Scott. I'm great. I'm so happy to be back. I
Yeah.
had to leave you hanging last week and had to call in sick there last minute, so I apologize, but I'm so happy to be here and I'm excited for today's talk. I'm going to be bringing forward a couple different things. It's hard to choose, so many good things. I wanted to follow up briefly on a couple of bills that we had previously discussed when it comes to crypto mining, another one on CBDCs. Also, Biden's proposal for 30% tax on Bitcoin. That was talked about on Bitcoin mining, the energy usage, and that was talked about and proposed quite some time ago. But we have some response from Robert F. Kennedy Jr., who we talked about last week or 2 weeks ago as well. So I wanted to point out some interesting responses that I thought would be worth sharing. And finally, my top altcoin pick, which we've been talking about releasing our altcoin picks for weeks now. So I'm going to be bringing that to the table as well. So what do you have in store, Scott?
All right. So I have got a little bit about banking and a little bit about Pepe. Although it pains me to talk about Pepe, gonna have to talk about him. And then of course Balaji. So we'll talk a little bit about Balaji and his crazy Bitcoin bet. So let's
Cool.
dive in. Let me bring up your screen, and you can
Okay.
take it away.
Cool.
And
Okay.
hi,
We're going to start with,
if you're before you get started here, I just want to say hi to those of you watching currently live. If you're on live, come say hi to us and give us a hi, give us a shout out, let us know what you want to talk about. And of course, if you're watching this on the replay, also put a comment wherever you're watching this. So let's get started. All right, what do we got?
let's get started. Okay. So we talked about Robert F. Kennedy Jr. He announced that he will be running for president. And I just found that these statements really interesting, really important. So Biden proposed some time ago, as I just stated, a 30% tax on Bitcoin mining on its energy usage. And I want to note something that I find important, and that is that there was a Cambridge University study done a while ago on BTC, on its energy usage, that carried misguided data. And I did a video on this on my YouTube channel a while ago, and I'll put the link in the description below. But it's important because there's differences between this Cambridge University study and an independent study that was done very thoroughly, that was far more in depth than research, and it kind of goes over those differences. And I point this out because we see the Cambridge research used as a tool for specific groups within politics and narratives and as a weapon kind of against cryptocurrency. So it's just an important thing to have your eye on and kind of dive into when we're talking about Bitcoin's energy usage and really getting to the bottom of that. Okay, so I narrowed down these points here. This is what we're going to cover as far as what Robert F. Kennedy Jr. had to say. Number one, the 30% tax and why that equals a stifle to innovation. Number two, environmental impacts overstated and misrepresented. Number three, America's priority is to restore trust and ensure freedom. Number four, diverse ecology of currencies equals resilience. And number five, Americans need Bitcoin to ensure freedom. So he is going to, Robert F. Kennedy Jr., he's going to make his first appearance as a U.S. presidential candidate at the Bitcoin 2023 conference in Miami. And I don't know if you saw this, Scott. This is happening in May, coming up, May 18th through the 20th. There's quite a few politicians and government officials who are going to be speaking at this conference. And I think that's for the first time ever that there's really going to be politics
Yeah.
speaking at the Bitcoin conference. I don't know if you happened to see that, Scott. Did you
No,
happen to catch that?
I did not, but that's good. Yeah, that's interesting. That's the name of the game now, boy. I mean, either I think crypto people want to know, and politicians want to get out there. So I think it's going to be that way for a while, where they're going to show up. I think, which is good.
Definitely. So he expressed his support for Bitcoin and denounced the President Biden's proposed 30% tax on crypto mining, stating that it is a mistake for the US government to stifle innovation in the industry. And that point right there is something that's said so regularly, but it's definitely a very important point that we kind of need to ingrain. And we've already seen that happening and coming to light with a lot of things happening with regulation. Number two, he also addressed concerns over the environmental impact of Bitcoin mining, stating that the energy usage argument is overstated and that Bitcoin mining consumes about the same amount of energy as video games. He believes that the environmental argument is being used as a pretext to suppress anything that threatens elite power structures, including Bitcoin. And then number three, in addition, Kennedy has argued that tight control over cryptocurrencies to prevent their use by criminals is not the solution. He pointed out that dissidents and ordinary citizens also need privacy, and that governments often control bank accounts and payment platforms to crush dissent. Kennedy believes that until trust is restored in government, cash and Bitcoin are needed to ensure freedom. Totally agree.
Yeah.
Number four, Kennedy also spoke about the importance of having a diverse ecology of currencies rather than just a single centrally controlled one. He believes that just as a biodiverse ecosystem is more resilient, so too will our economy be more resilient with a diversity of currencies. And that's an important point, as we know that there's central bank digital currencies trying to come in and do the opposite of that. And then lastly, previously, Kennedy had stated that there is a misunderstanding from critics who claim Bitcoin's energy usage is a bad thing, and that Americans need Bitcoin to ensure freedom. And I know that's a very plain and simple statement, but it's so true, right? And I don't know. For me, I just see this as these are just such simple statements, but there's so much truth and so much importance behind those statements. And I think a lot of people just are unaware of why Bitcoin ensures freedom, why the diversity of these currencies right now, why that's important. So I just wanted to highlight those points that he made. And I don't know, do you have anything to add to that, Scott?
Well, I guess I'm a little curious on what he means by ensure freedom. It's kind of a large statement. What do you think? What's your thoughts on what he means by that?
To ensure freedom, I think that right now Bitcoin is the saving grace for freedom. Not to say that there's not other options that could be at some point, but where we are currently in the world, with everything, we have central bank digital currencies, which are the opposite of that. That is something that's being rolled out all over the world, and that's very centralized. And that with central bank digital currencies comes a lot of control and lack of privacy. And there's a lot that we just don't know the effects, and having that be something and be the only thing is very dangerous when it comes to just the future and the present, but the future of freedom. And so what Bitcoin allows is for people to have full control, full ownership over their finances. It's decentralized. It's not controlled by a single entity. And that's right now what we have kind of a battle between that isn't regularly stated, but that's when you dive in and you start to understand what Bitcoin is, you start to understand what comes along with central bank digital currencies. That's kind of the distinctive difference, right? So to me, that's what I take for what Bitcoin is for freedom. That's kind of an evolving understanding for me, because for me, I used to think it was just an investment. But now I'm seeing this as, this is a way to be able to transact peer-to-peer, where I can send something to you if I want to in the matter of seconds without that being, any way of that being stopped by somebody, nobody in between. And that that capability is being threatened with central bank digital currencies, with digital money that is owned centrally. That's being threatened. So, it's we take it for granted because I can come over and hand you cash right now, but cash is becoming more and more obsolete. We're not, it's going to become, whether or not there is an argument that it may not ever be gone, but they say that it's never going to be gone, but that's not what's happening. If you look at the actions, it's totally not hardly in existence. And the day may come where it does become worthless. So, yeah, that's my thought on that.
Yeah, the parts about Bitcoin mining and the environment I think are really interesting. I ran across a podcast that had the president of, I think it's Marathon Digital, and Fred Thiel. And I took down a bunch of notes, and I could probably create a separate video on this because I find it fascinating. But one of the things, so Marathon Digital is a conglomerate, and they have a whole bunch of different mining rigs across the country. And one of the things that he said I thought was fascinating is this whole thing about what Bitcoin mining can do is it can stabilize an electricity grid. So the one that they're primarily using right now is in Texas. And the way they explained this, I'm going to paraphrase this, but he explained this in great detail. It's really good. It was a Real Vision podcast. And he said that the way that electricity works, it's sort of fascinating. You've got nuclear. I think nuclear is the base. There's all these different levels of power. So you've got nuclear, you've got hydroelectric dams, you've got coal, you've got natural gas, and then you've got wind and solar at the top of this pyramid that he showed. And what he said is that different types of energy comes online at different times. So nuclear, basically you use nuclear fission, right, to boil the water that then creates steam, which then turns turbines, which creates electricity. And most electricity is created that way. Hydroelectric is water pressure turning the turbines that creates the electricity. Coal boils the water that creates the steam that creates the turbines that create electricity. But nuclear, when you fire up a nuclear plant, you can't turn that off, right? So the way electrical grids work is there are different demands, and he went into great detail about this. It's like you've got in the morning, there's a little blip in demand. Everybody gets up and is making their breakfast, turning on watching the news or whatever, and then they leave and they go to work. Now, this is for households. I think this was just talking about household energy. And then there's a lull because everybody's at work and there's not a lot of household energy being used. And then they come home at night, and between 6 p.m. and 9 p.m. is the highest usage of electricity for homeowners, which makes sense. And so the electrical grids have to adapt to this. And when it's really hot or really cold, it just puts that much more pressure on those time frames. And so so the next level, so you can't shut off a nuclear device. And so they leave that on all the time, and it just pushes energy out to the grid and is available for any sort of use. I believe coal is the next level up. It takes, to shut that down, it takes about a day to actually cool the coal-fired systems or whatever, to shut that off. So they pretty much leave that on all the time too, and that is like this constant power. Now, when they need more power, they turn on the gas and they turn on wind and solar, so they've got all the pieces of areas of electricity flowing into the grid system. So they don't want. So it's interesting because obviously wind, renewable is what they want to use the most, but it isn't generating power during these peak times because at 6 to 9 p.m. there's no sun, and I don't know, apparently that uses more. So so there's always these fluctuations in this. So if a Bitcoin miner is on and it's using a lot of electricity and it's a constant flow, it's just this constant pull of electricity. That's actually good for a grid because it just is stable. It doesn't need to go up or down. It's just a stable pull. But what they can do is they can shut down a Bitcoin mining rig of its uses of electricity like that. They can just shut it down and then open up all this extra capacity of energy to be moved into the grid for people to use at these high times. So what's cool about this is that there's nothing else that does this, and they have this software now that monitors this. And so when usage gets up to really peak, it'll send a message to the Bitcoin mining rigs to shut them down. And they'll shut down, and all that power will flow into the grid for when it's needed the most, especially for like storms or heat waves or cold snaps or whatever. They can even, and what they do in Texas is they knew a storm was coming in or a blizzard, or I don't know, I think it was this last winter maybe, where they had really cold, Texas was really cold. And they actually just shut down all the Bitcoin mining rigs so that they could direct all of that capacity into the grid for it's needed. So what this is now, unfortunately, this isn't rolled out to the nation or to the world. I don't believe necessarily, but it is something that is out there, and it will start to proliferate. And what we're finding is that these Bitcoin miners, because they need a lot of energy, they're the first ones. They want the cheapest energy they can buy, and they also want the most efficient. So their research and development, they spend a lot of time trying to figure out how to use energy very efficiently. And so Bitcoin mining is actually pushing the whole electrical system to innovate and to produce and use energy more efficiently. This is actually a really good thing for the environment, for the energy, because they have such an incentive to do this. And so this cool thing like they do in Texas, they're going to come up with more and more of these kind of things. They also say that for the most part, they use as much wind and solar as they can. Like they use like 80-90% of all wind and solar, certain ones. If they can, they want to do that because it's the cheapest, the most effective. They also use these credits, these carbon credits, so that if you buy these carbon credits or whatever, you offset those. So you probably know how this works, but even I forget exactly how it works. But basically, you offset your carbon by using these carbon credits for that. So any of the energy that they use, this Texas one, is offset by these carbon credits anyways. So they're really neutral in as far as carbon emissions. The other thing is that people don't realize is that mining, they don't create any emissions. And you've got all these factories and all these cars that are creating emissions that are bad for the environment. Bitcoin doesn't create any emissions. It uses electricity, but which it will use coal. It will use some of these other ones because it has to use the grid. But also Bitcoin mining companies are also going off grid. They're basically sometimes connecting right to a power source that they don't even have to use the main grid for their power. They're connected right to the turbine or whatever. So they're getting, pulling power right from that. So it's not taxing the grid or affecting that one way or the other. So there is a lot of misconception. And I just skimmed over some of this detail, but it really reinforced to me that this whole thing about Bitcoin mining being bad for the environment is definitely not true. And I used to worry about that because I never could really get a good answer. I had some answers that were, yeah, it's not as bad as people think it is, but this information was some really specific stuff. Now, what I still don't know is this was sort of one area, one instance, one company, but they're one of the biggest companies out there. And if they're doing this, then that's really good. And hopefully more and more mining companies are doing this, because it's only going to Bitcoin mining is only going to require more power. because as the Bitcoin algorithm moves up in time, the puzzles and how they compete to get their Bitcoin, each miner, becomes harder. They're going to need faster computers. They're going to, so it's only going to go up. So it's really good that they're doing this. So I know that was sort of a long-winded explanation of
That was
that,
a
but
great breakdown. Yeah, thank you for that.
yeah,
That was a
yeah,
great breakdown.
it is fascinating, and it's just when you find these nuggets of information that this was like, even the host on the podcast was like so blown away because he didn't expect this kind of detail, from this company. And again, it's from their position, right? So they're still trying to, like, they publish this, or they're going to be publishing this on their website, this kind of data, but they're also funding other research into companies to research this, because they know if it comes from them, if they're publishing this information, that it's going to be viewed as bias. And, even I still sort of view it as biased. I still want the other side that has looked at this. And even though this sounded really plausible and really awesome, I'd like somebody to study it too and really get to the bottom of this, because it's, like I said, it's only going to start to continue to consume more and more. So, yeah.
Yeah. Cool. That was, yeah, really good. I would add, but I think that we'll just keep going further into it because there's a lot that you just can keep going further down that one. But yeah, I think the biggest thing is that I took, one of the best things that you said there was that it is driving people to do better.
Yeah.
And I think that that's not only with energy consumption, but Bitcoin drives people to think a little bit more beyond. 2 years ago, when I first got back into this, I almost didn't, because I was worried about the environmental concerns. And I'm studying like what is, trying to figure out what is the hash rate and trying to figure out all these different things. What is the impact? And it's really opened up my eyes on how deep you can really go to try to understand these things, and still not understand, but it's important to get an idea of what it is, especially when we're talking about our freedom and the future freedom. To me, that's why I brought forth this article. For anybody who just sees, and who was me 2 years ago, and you just skim the surface, it's worth going deeper. But okay.
And it just grows, right? Because this stuff, there is a lot of depth to all of this. Crypto, it's one of the things that I love about it, right? It's so deep, it's so broad. You can just go deep in one area, and we're just talking about one little area in Bitcoin mining. You could spend lifetimes just studying Bitcoin and all the other things about it, and then you've got the rest of crypto, and each one of those areas you can go deep on. So I love it because you can never really know everything about it. You're always learning something new about it. And I would encourage people, though, that scares some people. It's like, that's just too complicated, too much, too big. I can't deal with it all. And just pick off a piece of it. Start with Bitcoin. That's what we always suggest. Start off investing in Bitcoin, but start off learning about it. Start off, and I think this is one of the first questions a lot of people have is, oh, I've heard it's bad for the environment, right? So maybe I shouldn't get into it. But look into it, right? There's starting to be more and more information, about it. And in this environment today, when we talked about this, and you talk about this in your book too. I'm reading Brianna's first copy of Brianna's book, which is going to be published soon. But she talks about the media and all of the noise, right, that we're flooded with in today's environment. There's so much misinformation, just so much information, right, that and you don't know really who to trust, right? And as you bring forth in your book, it's about your own trust. Trust yourself. Trust your intuition. Focus more on that than all that external stuff. But we still are trying to live in the world, right, and make our own decisions from the information that's out there. And I would just say that we just need to take more time. Don't make these quick snap decisions, and try to find both sides, and I'm a centrist, and that's just my view of life. But doesn't it kind of make sense in a world where we know it's polarized? Even the staunchest extremists on both sides have to understand that it's completely polarized, right? And so when it's like that, and there are some people that just don't care. They don't want to get to the truth. They don't want to the bottom. But I want to be able to go to bed at night and feel like, like I can trust myself. I can trust the decisions. I can trust at least that I've tried to look at both sides or find as much information as I can, right? And so it's this whole fear thing that is really the crux of my mission and why I'm in crypto is to alleviate fear of crypto. Wouldn't it be great if we could alleviate fear in everything? But right now I'm picking this little area that I'm trying to have as much control as I can in helping alleviate people's fear. And part of that is just to say, okay, let's just start from a human perspective, and let's just say we won't even talk about politics or anything, but whenever you hear something or you read something about Bitcoin or about crypto, just pause and say, okay, that's of you. Now let me go look at this other view. And let me kind of make my own decision based on multiple inputs. And this isn't just, the reason I'm bringing this up here is because Bitcoin, like this article says, it's to ensure our freedom, or it's one method to do that, right? That's a pretty big freaking deal, right? I mean, the stuff we're talking about here, you might just think, oh, I'm going to spend, a few minutes here with Scott and Brianna, chit-chatting about this nerd money, crypto, whatever. But there's some really heavy topics here, but it's, in a good way. And so just this concept about fear and about, investments or Bitcoin, because in the midst of a banking crisis, this, for the very first time, we have the opportunity to have an alternative for our money. We didn't have that back in 2008 in that crisis. So these are interesting things to think about. And I'm not saying put all your money into Bitcoin, go all in, on this. I'm just saying look into it. Think about it. How much safe is your money in the banking system? And I'm not an alarmist. I'm not saying everybody should rush out and take all their money out of the banks. But now's a good time to really start thinking about crypto, Bitcoin, alternatives, gold, what other diversification, basically.
Mm-hmm. Yes, definitely. Which
So
did
good.
you say you have? You want to shoot over to yours and you have something
Yeah.
on the banking or whatever you
Yeah.
want to bring forward?
Yeah. Let's see what I got here. Oh, I think that's on the wrong. There we go. All right. So let's talk about this is funny, bulging banks. You might think, oh, these banks are failing. The banks are getting smaller. Well, what's happening is the small ones are being eaten up by the big ones. That's what always happens. And so I was talking to Brianna about this, is that I have an overall arching theme of what's going on now in the banking crisis, the fact that it opens up an opportunity to at least entertain or move some money or be thinking about this alternative financial system in crypto, which we didn't have in 2008. So I'm really fascinated by this whole thing. So I'm really looking out for anything about the banking crisis. And I'm also going back and revisiting 2008 banking crisis and financial crisis, because there's a lot of parallels. Things are different, but there's a lot of parallels. And yet we didn't have Bitcoin back then. We didn't have crypto, but we do now. So, this is really, I find this fascinating. So what we're seeing here is regional bank shares. A lot of banking stocks are way, way down. Because people are worried. Everybody's worried about what's going to happen now. And this was the same thing. It was a lot worse in 2008, but it started to slow and started to build. So I'm sitting here wondering, wow, and just FYI, I went back and started watching some of these awesome movies that are out there about the 2008 crisis. The Big Short, that's a great one. It's got all sorts of, every actor in the world that's ever been anything is in that. Written by Michael Lewis, an awesome author. I watched last night called Too Big to Fail. It has William Hurt in it and Billy Crudup and a bunch of other really good actors. But it really goes into the detail what was happening then. And, it's interesting because that's happening right now. So these are good movies and documentaries and stuff to, if you're interested in this stuff at all, go back and look at that. What can we learn from that? And, so it's fascinating. So this says that... So this was a little bit in the weeds. In fact, this talked about the bond markets and how that's going to dictate some of this, and that got confusing to me. So I'm going to just move down to this. But this is interesting. It says, Americans are worried about their bank accounts And that makes sense. I mean, we see this now, and if we look back at what happened in 2008, we should be worried a little bit. This breaks it down. What caught my attention was the annual household income. 50% less than $40,000 income. 50% were worried about their money in banks, and then less and less. Over 100,000, only 40% were worried. So this says that nearly half of. Let's see if I can. Yeah, here we go. Nearly half of Americans are worried about the safety of their money in their banks. The level of anxiety hasn't been seen since the 2008 crisis. So why it matters, though most of these folks likely have their money in an FDIC protected bank account, which is $250,000. If you got that or less, it's covered by FDIC government insurance, where it's safe. But here's a fascinating thing: is that there is a diminishing confidence in the financial system. And yeah, there are a lot of grim headlines out there, but the banking system is built on trust. And without trust, there's no banking system. And I could go off hours on this, but I'll just say that this is the crux of what crypto is and why it was created. It was created to alleviate having to trust the banks. But not just trust banks. It's like the whole banking system was created, built on trust, right? Humans couldn't trust humans. So we had to create all these layers to protect our money because, well, humans are greedy and they're self-serving. And again, I'm not even saying these are bad things. These are just our traits. You're going to try to protect yourself. I bring everything back when we were cavemen. I mean, if you didn't protect yourself and your family, you're gone, right? And so it's naturally built into us to protect ourselves. So we built all these banking layers on top of this. We have, for the first time, a money technology where we don't have to worry about that because the code does it. It takes all that trust out. So the layers and layers in the banking system, if we had a fully decentralized system like a Bitcoin or a crypto system, well, we wouldn't have to have all of this. So you wouldn't have things like bank runs. You wouldn't have all of this trust. And really, the entire financial system is just balancing on this little tiny wire of trust. Because even when there are these little bank runs, people get really nervous about, I can't get my money. They hear that somebody can't get their money out or may not be able to get their money out of, let's say, Silvergate Bank or, one of these banks that failed recently. And it triggers the mental things like, if that bank goes out, maybe my bank, I can't get my money out. Well, your bank may be completely fine, may have no issues. But that panic and that worry makes you go there, well, I don't know, so I'm going to take my money out. And then that starts to cascade. And that's really what sort of also happened in 2008 was that, yeah, there were some big banks that were failing and going under, but there were a lot of banks that were fine. And so, but people started taking their money out of all of the banks because they were worried. And so it's all built on this trust. And when this trust balancing act starts to fail, the whole system can crumble. And this is what Bitcoin was created for. And this is what the crypto industry is trying to move into. And we will eventually get there. But, we look at little things like this during the banking crisis right now. And we're like, hey, this is a signal. Okay, maybe I better start taking this seriously. So now I'm kind of just repeating myself. But it's all built on trust. And what else does it say here? Okay, so the other thing I thought was interesting here was you've actually got, I think it's my next article where it breaks down. Let me find this. Here we go. So 46% of the investors in crypto are over high income holders. So 46, nearly half of the U.S. crypto investors had an annual income of 100,000 or more, while only 29% had an income under 50,000. Okay. It's interesting that if you make less money and you're now worried about your money in a bank, which they really kind of shouldn't be, because in a way, if you have less money, you don't have over 250,000 in the bank, so you're insured anyways. But there are a lot of people that just don't know anything about finance. They don't know that they're insured up to 250,000, so they're worried. But it's really caught my eye. It's like, they're worried about it. Well, if they're worried about it, they're the ones that should be looking into Bitcoin, and yet they're not. And I get it, because if you're struggling paycheck to paycheck, the last thing you can do is put money in somewhere else, right? Into Bitcoin or whatever, especially if it's scary and unknown and complicated potentially. It isn't as much as people think, but I get that that's probably what they think. So this is what I would like to, start to just get the word out there. It's like, let's look at this. This is an interesting statistic. So yeah, people that have more money, which they've got more money to put into Bitcoin or into crypto. But if something catastrophic happens or whatever, they're probably going to be better off than lower income people anyways, right? And so they may need less than lower income people, but that's not happening. It's just an interesting fact, and I thought, what can we do about that? How can we focus more education to lower income? Because I would guess that most people that are listening to crypto podcasts and into crypto probably are making more than I don't know if they're making more than 150,000. Probably our listeners are. We have really smart, bright listeners, but doesn't mean that brightness means you have more money. But if we're into crypto, especially now the crypto market's up, we're probably doing pretty good. Mm-hmm. Anyways, I digressed a little bit, but that was some of the stuff I've been studying, researching in banking crisis and all this stuff.
That is interesting. It's like the psychology of all of it too, and the lack of awareness, and really the lack of understanding of finance in general, and that's where everybody talks about it. They wish that was more integrated into schools and that people actually know how to manage money. But even those little things, like you said, where you actually are insured under that level. I can't remember what the amount is, or it might differ from bank to bank, but I just learned that.
It's government. It's $250,000. It's a government thing, so it's $250,000 across the board. And the funny thing about that is, this is another. It dovetails into this, and that is money printing by the government, which erodes the value of our dollar, which also is a reason to be into Bitcoin or to crypto, right? Because Bitcoin doesn't erode. It's not inflationary at all. And but when these banks failed this last month, they were bailed out by the government, and so that meant more money printing, and so that was more cash injected into the system. Nobody lost any money. Not people under 250,000 or over 250,000 lost any money because the government jumped in. In fact, these banks, the current ones that are failing, were regional banks where they were banking a lot of Silicon Valley startups, right? So they had millions of dollars in there. So they were not insured, but the government backed it up. Again, it's a delicate balance. If the government's not there to backstop this, there will be a lot of pain inflicted on all of us, because the economy, this trust will start to erode and all hell can break loose. Nobody wants that. But it is like, while it's there, here's the time we need to start paying attention to Bitcoin and crypto, because the sky isn't falling yet. But let's start dipping our toe into these things. If you have not invested at all, now's the time to be learning at least and dipping your toe into a little bit. And for those of us that are in there, maybe we should, put a little bit more in there. This is the time, because at some point, my question is, I think we're in a situation now where we are too addicted to credit and to, having the government just print money when we need it, when a bank fails, whatever. We're never going back. We're never going to stop. If the government stops, like they just did, because they tried to fight inflation, they started lowering it. Banks were failing. We're in a recession. We think this is the last time they're going to raise rates, and the money printer is going to start again. And I think the markets are going to go up. But how long can this last? I was just talking to my parents today. You know, could it last another 20 years? Yeah, 50 years, maybe, but maybe 5 years, maybe 1 year. I mean, I don't know what it takes to blow the bubble up, but there are economists and people that say it can't last forever. And yet, I don't think we have a choice. I don't think the government has a choice not to print money now. I really don't. So,
No, no. And it's
interesting.
insane, the numbers. Maybe I should bring that forward next week, the numbers of how much is actually in circulation versus what's been. Yeah, I'm going to bring that forward next week. We'll get further into that.
All right,
Okay,
let me
shift
put your screen
gears
up.
for a second.
You're
So
up.
let's shift over to my altcoin that I've been talking about for like 3 weeks now that I want to bring forward. This is my top altcoin pick,
Nice.
GRT, the graph. I've mentioned it before. I'm all about this one. And it's even, I'd have to say, it's even above Polygon for me. Like, I think for me, it goes Bitcoin, Ethereum, the graph. Um, and it's just one of those ones that I have that connection with, that one that you're really not supposed to have that connection with, that emotional connection.
Yeah.
You shouldn't have to a lot of different coins, but I think it's okay to have it with one or two. I think it's okay,
Yeah.
at least
Sure.
for me. So I did really well with this one in the fall of 2021. And then I did well this year again. And not only did I just do well, there's also reason, I've looked into this before, but this was my time to really hone it down because it's so technical, hard to understand. I think I got it down to where it's going to be understandable for what this protocol does. So the graph is a decentralized protocol. This is the technical part, and then we'll break it down a little more. It's a decentralized protocol for indexing blockchain data and making it available for querying for use in downstream applications like DApps, which are decentralized applications, front ends, plots, dashboards, and data analytics. It's used by over 40,000 developers and powers thousands of DApps. It's referred to often as the Google of blockchain. So this is where it started to make sense to me when I saw that, the Google of blockchain. And why? It's because the graph's primary goal is to make blockchain data accessible by indexing it. Google made the internet user-friendly by making it simple to search, and the graph makes blockchain available to developers by making it easy to be queried. So what Google does for the web, the graph does for blockchain technology. And then it goes further into this. So one of the most important value propositions of the blockchain is that it is a public ledger. But it asks here, what's good of a public ledger if nobody can read it? So by indexing the data, the graph makes reading blockchain data simple and seamless for everyone, so anyone can query the data that they need. So imagine running a DeFi DApp without displaying charts, transactions, and market data. The graph is the best way to get this data without a centralized point of failure. So in other words, interacting with blockchain data is like looking for a needle in a haystack. If you're just looking for the raw data, you'll easily get overwhelmed. Even if you use the block explorer, such as Etherscan, it's not easy to identify the exact data that you need. So here's an example. If you look at these M&Ms on the left, this is just the data all there on the blockchain, whatever that may be, the different categories, all intermixed. But because of the graph, you can now take all of that and separate it. So if you needed to collect NFT data, then it's basically kind of what I expect, or like what I see and how I translate this is if you're to like put into Google something that you're specifically searching for, you need NFT data, you can pull that data from what's on the blockchain, along with social data, wallets and payments, network analytics, DAO data, DeFi data. So I don't know, this puts it into perspective
I like it.
for me. And its role really is pretty big. It's a decentralized indexing protocol. I read recently they're making it even more and more decentralized. They're going to be making a huge shift in the near future to have it be, they would like to become fully decentralized. And what the graph does is that it ensures consistently reliable data and freedom from the manipulation of centralized gatekeepers via an open data economy that distributes data service across 450 plus indexing nodes around the world. And it is considered an AI coin. I've seen it on lists of top AI coins. Um, and it was asked here why it's lumped in as the AI coin. And it was also revealed recently that it's the top Google searched AI crypto over the past 12 months or so. And then it just kind of goes further in this. And this was an interview with one of their chief developers, but it goes further into it. It's not fully AI. AI is a huge part of it, but it's not strictly AI. I guess it goes beyond AI, if that makes sense. At least at this point, it does. So
Yeah.
that is my coin. It's currently trading at like 14 cents. I think the high that its all-time high was $2.90, I want to say. I got in at 7 cents, 6 or 7 cents. I think 7 cents. So I'm feeling pretty good about that.
Nice. Well, this was the one when AI coins started to take off. It's one of the first few times that I FOMO'd in, and I just FOMO'd into this one, and I'm down because it was already up. I don't even know what I'm down, but I only put a couple $100 in there just to see, just to say, hey, I'm in an AI coin, and I don't. So I didn't know exactly what they did. This was a good explanation. I like it. Do you know if this is? Did it mention the difference between this and Chainlink, which is kind of a similar protocol?
It did not in this article, and I haven't seen an exact comparison in anything that I've looked at, but that would be an interesting thing to know. Chainlink, I think, has been around much longer. I don't really know a lot
Yeah.
about it.
I just, they call it one of the first oracles, and I don't even know if they call this an oracle. It sounds kind of like it because all this data outside the blockchain has to get fed into the blockchain, and that's what these oracles do. But these guys do a lot more stuff, looks like. But yeah, and maybe now that you kind of put it in this context, maybe they just do only on-chain analysis, whereas Chainlink just provides the raw data that then can get matched with on-chain data, so that then you can display it in some sort of form. I don't know.
Yeah,
I think the interesting thing about this is my stance on right now, my investing thesis is mostly I just worry about Bitcoin and Ethereum. I invest in those, and not many at all, and not very much money at all in any altcoins, because I just find it so hard to, in my mind, like figure out which one is going to, be a winner, to the point where, I mean, why is it a project like this that seems really awesome and does a really good job? Why isn't it $50? Why isn't it $100? Why is it taking so long? And I know I don't know, there's a lot of variables to it, but it makes me wonder. It's like, wow, what is it that is going to take some of these other protocols, these other projects, to really jump up, and when you're investing in pennies and cents, yeah, I mean, it doesn't take that much to, make a buck or two. But I'm just trying to figure out, like, why would, especially with the layer ones, you've got all these people. And when I first came into crypto, it's like, oh, okay, you want to have, a few mix of these layer ones, because in the future, they're going to be really valuable. But which one? Who's going to bet against Ethereum? So I stopped looking at other layer ones like Cardano and Solana and all these other ones. I'm just like, especially or just for an investment. If I thought that one of those blockchains provided a better service for something specific that I was into, like a DeFi protocol or something, or a metaverse, I might invest in it. But it would probably be more that I would just want to use that protocol. One of the things, because I use DeFi a lot and I'm making lots of transactions over and over and over. If I find a certain protocol that just makes my life easier, lower gas fees or transaction times are faster or just seems to be a simpler interface or whatever, then I'm going to want to go use that. And I'm also going to bet that a lot of other people are going to want to use that because it just seems like a better, a better way to do something. And so for me, it's all about layer twos right now because I use DeFi a lot, which means that I'm using a lot of different transactions. So anytime I have to use the Ethereum network, I'm paying high gas fees. And right now, gas fees are really high because it's actually was theoried that because Pepe meme coin is generating so many transactions right now that it's actually moving gas fees higher on Ethereum. So that's making me mad because although most of my stuff is on these layer twos, there are times when I have to bridge over or do something on the Ethereum, and it's just so expensive. And some of the DeFi transactions that I do are not high dollar amount. So it may be I'm trying to transfer $5 from here to there, but I've got to pay $15 in gas on because part of it's on the Ethereum network. So Ethereum, even though right now it's not my favorite blockchain, but it is still the granddaddy. It is going to get better, and what's happening is more layer twos. So all these layer twos are sitting on top of Ethereum, right? So my altcoins would be either Polygon, Arbitrum, Optimism. Those three, I like all of them. And they all make my transactions faster and less costs. And I haven't really picked a favorite horse out of those three now. Although, if I had to put some money into an altcoin as an investment, I'd probably pick Polygon right now because it's been around the longest. And as far as usage, I don't know if I know and see anything different yet. But what these layer twos do is they're making Ethereum better. So Ethereum sort of got it locked up in the security and just at a layer one protocol, it's doing a really good job of what it's supposed to do. Now, these layer twos sit on top of Ethereum and make it more usable. So for me now, it's all about these layer twos. Without the layer twos, I would maybe start betting on some of these other layer ones like Solana or Cardano. But right now, because the layer twos are improving my user experience so much, it just seems like a winning combination to me. So my view is that, I would look into layer twos and those three, and I would pick Polygon, right now, to bet in. I actually had set up a trade in Polygon. Actually, right now they're saying Polygon at $1 or a little bit less, like just under $1 is a really good buy. And I think it was like $1.01 yesterday. So I'm trying to decide if I want to throw in a little bit of money there because they're saying it like, I think $1.15 or something like that is probably as high as it's going to go for now. So good explanation. I don't really have any visuals like you, so I'm jealous. Those are really good. But yeah, so that I've kind of explained. I guess Polygon would be my pick. And just this whole altcoin thing. It's so interesting. Yesterday on our DeFi call, where Brianna and I met, Kings of DeFi, we have call every other week, and a new person came in, and his question was, how do I evaluate all these different coins and which coins should I get into? And Brian, the leader of the group, went into his basic ideas of how you should do it. And I just, it's interesting because I'm just like, man, to me, it's just not about that anymore. And what a lot of people try to do is they're like, okay, my question is, are you a trader or are you an investor? Investors look at a project like Bitcoin or Ethereum and they invest their money in there and they don't have any specific plans of when they're going to take it out. Doesn't mean that they'll hold it forever necessarily. Like a hodler, this is kind of my own definition. A hodler, right, is they're never going to sell. Maybe never, or many, many, many years. An investor may sell, like, I may sell some of my Bitcoin when it gets back up to 60,000. I don't know, but that's kind of my plan now. Some of it, I'll keep some of it because I think it's a long-term investment. But as an investment, the point is to make money and to take a profit and go improve my life. So that's what I plan to do as an investor. A trader is looking strictly for, an opportunity to make some income sooner than later, right? So as fast as a day trader, or within a week or two. So for me, when I right now I'm an investor, but I want to start playing in trading. And when I say that, that means that if I put a trade on Polygon, it means I'm going to have my stop loss figured out, where I want to have my stop loss, my entry point, and my take profit. And I'm going to enter all three at the same time. I'm not just going to put in a buy order and hang out. To me, that's a trader, and it's the way you should trade if you're a trader. And right now, it looks like you're an investor, right? So doesn't mean you may not sell the graph, but right now you've invested in it, but you don't know when or how, or that you're going to get out of it, right?
Yeah. So with the graph, what I did the beginning of this year, because I had taken all my profits from that point that I did before, I didn't back enter until this year, partially because it was being highlighted again. Tiketawari named it as one of his royalty coins. I've talked about that in the past. I tend to follow some of the stuff that he says. But what I did this time is I put in an amount, and I did want to just hold it, but I doubled the amount in 30 days. And I just happened to notice that it had gone up. And so I did take my initial investment out. And then
So you took your profit out, or you took it all out to zero. You sold it all.
I saved my initial investment. I shouldn't say that. I took the profits. Okay. And then overnight after that, I doubled, or I got 50% gain. And I took that 50% gain out, and then I sent it off to my cold wallet, and it's in my MetaMask. And now it's just investment. I'm not going to trade it anymore, but I wanted to practice taking gains because I've sat through things before, and I was just excited.
So you're holding it in stablecoin?
No, it's still in GRT. I'm just holding it in GRT in my MetaMask, but I'm not going to trade it anymore. I'm not going to trade it. And that was never really my and I'm not going to take any gains from it. It's going to sit for a while. And maybe I'll add some to it, but it's mostly just going to sit. I'm not trading currently. And that's a good point that you pointed out there with your breakdown of the differences between investors, hodlers, traders. When I first came into this, it was all about, I didn't know the difference. And there was a lot of trading. It's really easy to get carried away. I really learned my lesson too on altcoins, specifically on gaming ones. I got, that last bull run, Illuvium, man, and I'm just coddling that. Will it ever reach those numbers again? And that points to what you just pointed out. We have some of these, we have Polygon. It's at such this low number, 80 cents at times. And you're wondering why is it so low? And then you have Illuvium up to, it was up to, I can't even remember. It was high. It was in the hundreds. It's just a game. And Axie Infinity was another one that had me. So I'm just hodling those, hoping they'll come back because I'm down, 90%, I think, over that. And so, but I've learned my lesson too, and I'm not really looking into altcoins. There's a few here and there, like this one, that I'll just sit on. But yeah, I'm not much of a trader these days.
I think that what people come in to the space and they think they're investors, but they're really trading. Or maybe it's the other way around, or they think they're traders, but they're really investing. And the way I broke it down, this is just my version of, but I've heard this from a lot of people, is that, what makes you a trader is that, your goal, you have the plan laid out, right? You've analyzed it, you're looking at it. You're not just buying it because you think it's cool or you think it's going to go up. You have a strategy to make money. And so you look at when are you going to get out and what your stop loss is, and that to me is a trader. And I think when a lot of people get in the space, they're like, oh, they don't know the difference, right? And I'm not saying I did either. I didn't. And I had to learn all this through trial and error and just lots of study and following people. But it's like a lot of people come in and like, oh, okay, this is cool. I'm going to buy this one, this one, this one, this one. There's no plan. They're just buying them. And they don't know if they're an investor, a trader, whatever, they don't even know the difference, right? Like I said, and there's nothing wrong with that. That as long as you either learn your lesson or you lose it all and you get out or whatever. But what's like for you, learned that lesson through loss and through education and through talking to other people, and now you know the difference, and so again, there's nothing wrong with any of this, but as long as you know what you are and what your goals are, it's all great, right? If you're an investor and you know that you're just going to hold it, and you may sell at some point, but you don't have a plan, you're an investor because you like it and you think it's valuable, and that's awesome. It's when you are doing one thing and you think you're doing another thing. I just think it's a problem, and it's mostly because you just don't know.
Right.
And so again, that part of this is education for anybody that's out there, and they're just they didn't know that there was a difference, or they didn't think of it like that. And part of it is trading. If you're going to have a plan, then there's a lot more time in research that you got to do. I mean, if you're just investing, yeah, you're going to want to research and think about it and read about it a little bit, but you don't really have to take that extra step to look at the history and look like, well, where do I think it's going to, top off, and where is its support and resistance, and what's the most likely thing that might happen with it, and because nobody knows, right? It's all still speculation, but a trader goes through and they understand that it's a probability. So I want to bet on the probability, and part of that is only allocating a portion of your total available capital into each of these trades, so that if you do lose one, which you may or may not, because there's nothing guaranteed, you're only going to lose a portion of it, and you can make it up on the next one. So that's all about trading, and the cool thing is that even with all of those variables on just how to invest and trade in cryptocurrency, to me that's still just a part of it. The ecosystem, you've got that same concept with NFTs, but yet with NFTs you can just buy them because you love the art. Or you can buy them, because you want to invest and trade them, right? Then you've got metaverse plays, you got gaming plays. You can buy it because you're actually going to use it in the game. You don't care if it goes up or down. You're using it as part of the game. But the cool thing is, you could then take those assets out of the game and transfer them maybe into another game. That's only available on crypto. You can't do that in traditional gaming. So this is why crypto, the ecosystem, what I love to call it, is so broad. It's all based on the same concepts, but it depends on how you want to come in and use it. So for me right now, my thesis is I want everyone to know all the aspects of it, all parts of it, know a little about what NFTs are, how to get in and play with that a little bit, know what gaming is, know what the metaverse is, know what coin investing is, so that you can pick and choose, because it's hard to do all of it. And, but you got to know a little bit about it. People that are investing in coins like, oh, I would never touch an NFT. Well, how do you know unless you play with it a little bit? Get in there, test it out. You may find out it's cooler than you think. That's kind of how I was. I was like, oh, I don't want to deal with NFTs. That's too much. But as I sort of get into it a little bit more, I'm like, okay, it's not as crazy as I thought. I'm not going to right now invest in it as an investment or a trade. People trade NFTs back and forth just like coins. Yeah, I'm not doing that now. It doesn't mean that I won't, but yeah. Well, good discussion about altcoins and just that whole concept. And because I am interesting, because I am trying, because I have the time, and I want to. I'm writing a book, and I'm trying to expose all the areas. That's why I call it the crypto ecosystem. So I've got to go in and spend time in each one and find out what I like, and then put together some content to show other people. It's like, okay, let's look at this one. Let's look at this one. And I find the biggest aspect is you've got to get your hands dirty. So it's one thing to read about it. It's one thing to even, sort of understand what an NFT is, which is the first part. But until you actually go into the protocol and either mint one or buy one and hold it in your wallet and then maybe sell one, that's about the minimum. But when you do that, now you really understand it. And so that's what I want to get people to do. I want to teach them, what is this area? What is this thing? But then also do it. And it was one of the things that our mentor, had us do. It's like he had us in there minting NFTs, making transactions, just little amounts of money. I think that's a really good way. And until you do that, that you really don't know what you don't know. So
It's
that's sort of
so
my
true.
theory.
I'm excited for your book as you go so deep into these, and you're so good at really just diving in. I'm really looking forward to that. But yeah, it's that experience is everything, and
Yeah.
even until you are pushing those buttons and you're
Yeah.
receiving those feelings of it all, you don't know what it is yet. So it's so true. That'll be good. I'm looking forward to your book.
Yeah, it's going to be a while. I thought I was going to push it out quicker. I think I'm going to just kind of take my time, and really get. Part of it was I was really trying to focus on maybe just the first part, like beginning investing, and then I'm just like, I don't know what crypto is going to look like in 6 months to a year. I mean, with regulation and stuff, the way we buy crypto now through Coinbase and in MetaMask wallets, that may be completely different. I don't
Mm-hmm.
think it's going to go away. I just think it may look different. So I'm like, So I
Mm-hmm.
may have a little bit of that in there, but I think really now my focus is to just expose people to all the areas of it, and just at the beginning, not go too deep, learn about the theory, but then really just dip your toe in it. So
Mm-hmm.
that's sort of where I'm going with that, and that's going to take a while because like, some of this, yeah, especially the NFT stuff, which that's probably the area that I'm least knowledgeable in. But yesterday I was doing, I do airdrop, what I call airdrop farming, which is I try to do figure out which projects might be dropping an airdrop, and then do a bunch of transactions to try to qualify. And we decided to bump up our money. We were starting with like $250 and just kind of mixing and matching that. Then we bumped it up to like 1 ETH, so almost $2,000 per set of transactions. And so we'd go and I would take that 1 ETH and I would transfer it in to the protocol and make all these different transactions. And then basically at the end of it, get that ETH out, because I'm basically swapping it back and forth. So in theory, I'm not actually losing any money. I'm just swapping it around, right? Just taking the same ETH or whatever. But there's this thing called fees, which every time I make a transaction, they're going to take a fee out of it. So I'm losing money each time. But we figured that small fees that, it'll pay off in the end. And it still will, but we're still learning this. And there's no science to it. There's no guidebook for this. We're still just kind of figuring on our own. And I ended up with, I think I had $1,700 of ETH when I started these transactions. I did like 15, 20 different transactions. And at the end of it, I had like $10 left. And I'm like, where the hell did it go? I didn't even know. Because you're dealing with ETH. And I was converting it to all these different currencies. And each time it's confusing because we all think in dollars. And I tried to convert it back to dollars every time, but it got confusing. And I'm like, I didn't know where it was. And I was freaking out. And so I started looking, I started going into the blockchain, and this example that you have there where it shows, the candy and all that stuff. I'm looking at all these transactions like, well, I have no clue what's going on, but I'm trying to figure this out. It's in there, but I don't know how to read it, And so it would have, maybe if I had the graph or something, it would have helped me. Well, it turns out that the bridging, so I bridged it back from ZK Sync mainnet back to Ethereum, and it took like 48 hours for it to like show up. So eventually, about 1,200 of it showed up in my MetaMask wallet, yesterday, and I'm like, okay, but I still lost about $600 in fees and in slippage. So I was talking to the other people that I do this with, and we're like, okay, that's just like too much. So we got to figure something out. So we're trying to get that down, and it's just crazy. But it talks about you just never know about this stuff, and pushing buttons and everything. And sometimes, if you're going to experiment and be out on the edge, you're going to be pushing buttons. You're not going to know what the hell's going on. And I gave a presentation to the Kings yesterday about it. And I was talking to him, and I said, I don't recommend anybody do this because it is crazy town. And I'm not sure.
The path of airdrop farming.
Oh
Just
yeah,
trailblazing.
trailblazing, and it's scary. And I don't think I even told him that story. It's like I was sweating it. I mean, it's like, I've lost a couple $100 here and there and bum transactions and going to the wrong address or whatever, but this was almost $2,000. I'm like, nah, it's not cool. But I got most of, I got it.
Oh,
I got
sorry.
most of it back. I got most of it back. So it's not as bad as I thought, but at least I know now that it was just slippage and transaction fees and whatever, So I'm okay. But when I didn't know how or where it was, I was not happy with that. But I think I figured
And
it
did that
out. So
have to do with what you were saying about that meme coin? Did that
yes,
have to? Okay.
maybe. Right? Maybe. And when I read that today, I read that, yeah, Pepe, I'm like, damn that Pepe, he's messing me up. Because yeah, I think it did. I don't know. It seems hard to believe that one little meme coin could affect the whole Ethereum network like that, but there was an article that said that that is happening. And it's, apparently before sort of the downturn last year, Ethereum gas fees were like $50 per transaction. Wow. And in the stuff I'm doing lower, cost. I'm not, I may be transferring $10, $15. So I'm going to pay $50 for gas. But I was paying them on the average about $10 to $15 per of these transactions, this last week, which is just too high. But
Yeah, that sounds
anyways,
like nothing compared to the last time, like you were saying. I remember spending $40 on gas fees, $50 on gas fees, and that was really the last time. Well, I've done stuff since, but I was just like, man, this is not okay.
yeah, and it's all gonna come, it's all gonna come down. I thought I was already there. I thought, and part of it, I'm using a new blockchain. It's ZK Sync, and it is supposed to be it's kind of a combo layer one, layer two that's supposed to reduce fees and everything. But we either weren't using it quite correctly or the most efficient way, or they have more things have to happen to really get this gas price. It's going to get there, but right now it's still not quite there. Anyways, rambling on over an hour like we always are. I was even thinking maybe we should try to go a half an hour today. I'm like, what was I thinking?
That would never work. Never work.
All right. Well, I
All
hope
right.
you guys enjoy. Brianna and I just kind of talking to ourselves here, having a good time, just chit chatting about crypto life. Hope you learned something, and tune in next time and let us know. If you want us to go shorter, if, like you're sick of our rambling, or if you don't mind or whatever, just let us know. We'd appreciate that. So,
Yeah.
anyways, thanks for tuning in, and we'll see you next week.
Thank you, everybody. Yep. See you
Bye,
at
everybody.
12 Pacific time next week.